Honestly, what I think we're seeing is a global energy crisis unfolding in real time. I'm surprised, honestly, that prices didn't spike to 85 when the market opened, Sunday
Mm.
night in Asia, because it was clear once, tankers were not moving through the Strait of Hormuz either way, that this is going to be a major energy crisis unless it was resolved by today. I mean, I think that unless they can get the tankers moving in the next couple days, we're going to see extremely high oil prices, which will frankly be warranted given that no oil is moving out of the Persian Gulf. And while consumers in the United States may have plenty of oil, we're not going to necessarily see, gas lines. We've got product, we've got oil. We're not immune to, price spikes in the price of crude oil globally, and so this is going to affect people, in terms of what they're paying at the pump. But other countries, okay, that depend and rely on this oil could potentially start to see shortages unless there is a plan, unless they start rolling out a plan to either get things moving or, find alternatives.
So you say that some of the important issues in terms of oil prices as well as natural gas prices are the potential damage to oil infrastructure in Iran. You also talk about the extent of delays in marine traffic entering and exiting the Persian Gulf, as well as OPEC plus the response there from the US and China as well. How do you think about some of these challenges or all the different important variables that we're seeing as it relates to oil prices?
I think that the most important variable right now is how long this military conflict is going to last, because that's what is pushing up the price of insurance so much that tankers are unwilling to attempt even to cross the Strait of Hormuz. It's just too expensive, meaning it's too risky. So, if they can get a handle on this military conflict, but it doesn't look like that's going to happen, within the next week or two, it seems like it's probably going to intensify, in fact. And so that means that, yes, OPEC Plus has reacted, but the problem is most of its big producers, the ones with all the spare capacity, are the same ones that are in the Persian Gulf that rely on the Persian Gulf to get oil out. Now, we know that Saudi Arabia is starting to make plans to load more oil on the Red Sea. That's great, but it's still not going to account for all of the oil. Iraq is going to be in a huge issue. They're going to have to shut down production. In fact, they're already starting to shut down production because they don't have the storage capacity to just hold on to crude oil if it can't be loaded into tankers. So that's already starting to affect production. And then I do think that China is a big, wild card here. Can China put its considerable economic weight to bear on Iran potentially to get it to maybe concede or make some concessions to end the military conflict sooner so that we can get the oil flowing?
It seems oddly enough that one of the winners here might be President Putin and Russia, to the extent that they can move their oil at these higher prices. How do you view Russia as a player here?
Yeah, exactly. Well, Russia is in a very good spot, personally, or that's what I think. Russia's in a very good spot. It can move more oil to China to satisfy some of the oil that China's not getting from the Middle East. Although I believe there have been some issues in terms of loading at one port that was recently attacked by Ukraine, which is certainly precipitous on their part. But Russia's also going to be able to charge a lot more for its oil. So this kind of conflagration is having the effect of kind of lining Putin's pockets, which is probably going to cause some problems down the road, for the Trump administration if they're really looking to put an end to the Russia-Ukraine conflict, sometime in the next year or so.
So I'm also curious, how will multinational companies, if you think about energy, shipping, insurance, how do they assess and price in the geopolitical risk here from conflicts like this?
I mean, I'm not an insurance expert here, but they're definitely looking at this and they're saying, wow, the potential for a ship to get, severely damaged, have an oil spill and whatnot is really high right now in the Persian Gulf. And so they are adjusting their rates accordingly. Now, there'll be some ships who may be willing to, either self-insure or chance it and may take that risk, though right now that doesn't seem very likely. Plus, you've also got the risk in the Red Sea of the Houthis that they could, kind of take up their mission again and start harassing ships there, which is a problem because, Aramco, at the very least, is hoping to start loading oil out of its port in Yanbu. And then if it wants to send that oil to Asia, it's going to have to leave the Red Sea, go around the Arabian Peninsula and out that way. And if the Houthis start posing problems, that's another issue to increase prices.
And we got the oil pricing spiking higher here to intraday high, $77.85 for WTI crude oil. Iraq, here's a red headline crossing the Bloomberg terminal. Iraq starts shutting oil output at Rumaila as storage fills. So just as you were saying, Ellen. So, Ellen, what role does the U.S. play here? Can we just crank up our drilling and our refining to maybe offset some of the decreased supply out of the Middle East?
Well, you can bet that, every fracking company is calling up people there. Anyone who's idled rigs has got to be putting them back into production now. I bet there's teams headed for North Dakota at the moment to get things going. I mean, this is really, this is the moment for the American oil industry, and it can really prove how agile, how quick it is if these producers that have been talking about slowing down production, this is their moment to get things going and sell that oil, refine that oil. We have limited extra refining capacity in the United States, but we do have more production capacity. It's all about, what we can get going and what American companies can do with personnel, with people. If there's money and financing available, they're certainly going to make that money selling oil either, internationally or at home. So I would say this is the moment for the American fracker.